So let's see how this plays out.
Okay, well, let's get back to talking about the Adani Group stocks then. So it all ties in, right? Abhishek is here to tell us what brokerages have to say on the exposure that banks have to the Adani Group companies. That could perhaps be one of the reasons why the banks are under pressure as well. Abhishek, over to you.
Well, Sonia, as you mentioned, brokerages are saying that the exposure is not more than a worst case scenario 0.7% of the loans, or about 1.5%, or to certain banks about 5 to 6% of net worth. So to begin with, CLSA has written a note. They say that the Adani, where the debt sits, let's understand that most banks have indicated that they have largely financed the assets with strong cash flow, such as airports or, the ports as well. Ballpark exposure as per FY24 numbers, private banks have about 0.3% of their total loans, about 1.5% of net worth. PSU banks have about 0.7% of the loans, or about 6% of the net worth. Jefferies has also written a note. The consolidated debt of Adani Group is about 1.6 trillion or 1.6 lakh crore, which is ex-shareholder sub-debt. So debt to EBITDA is, however, down to about 3.2x in FY22, which compares to about 4.3x in FY16. So acquisition of cement business, that may add about 60,000 crore of debt. However, it's also lifting the cash flow of Adani Group. So diversification of borrowing mix, they have cut down the share of Indian banks to about 33% of the debt, and about 0.5% of the sector of risk being for the banks. So for banks, the debt to this group forms about 0.5% to 0.7% of the loans for PSU banks, and about 0.3% to the private banks. Back to you.
Okay, that's very helpful. Thanks a lot, Abhishek, for joining in. So that's the banks and the kind of exposure that they have to the Adani Group. By the way, both the pockets, banks and the Adani Group stocks, are the biggest losers today. But let's move on. CEAT's earnings came in below